Okay, let's unpack this. Welcome back to the deep dive. This is where we take a whole stack of info and we'll boil it down to the stuff you really need to know. The surprising bits, the essentials. Today we're diving headfirst into something that, let's face it, affects all of us. Personal finance. Saving. Making our money work a bit smarter. And let's picture someone listening. Maybe like Alex. Let's say Alex has been saving up for a new car. They've got, I don't know, maybe $8,000 tucked away, but it's just sitting there in their regular checking account, not really doing anything. Alex knows this cash could be working harder, earning something, but maybe feels a bit lost. Like, where do you even start without taking big risks? So this deep dive is for Alex and for anyone else looking for that solid, smart first step to actually growing their money. Our mission today, it's pretty clear. We're going to demystify one of the simplest, but honestly most powerful tools out there, the high-yield savings account, or HYSA for short. We're going to show you how to take that cash that's just sitting around and make it, well, earn its keep.
Yeah, and what's really interesting here, something I've definitely seen a lot, is just how often people skip over these really simple but super effective starting points. They might, you know, jump straight into thinking about stocks or something more complex, maybe get a bit intimidated by all the jargon, and they'd end up missing out on these easy, low-risk wins right at the beginning. So this deep dive, it's not just about the what, what is a HYSA? It's really about the why. Why does it matter so much for someone like Alex? And crucially, the practical how. How do you actually get started safely, effectively? We're basically laying down some really important groundwork here for building smarter financial habits.
Okay, so with that goal making Alex's car fund, or really any of your savings, work smarter. Let's zero in on this tool. High yield savings accounts. What exactly are they?
Fundamentally. Right. So at its core, a high-yield savings account, or HYSA, is pretty much what it sounds like. It's a type of bank account, but it's specifically designed to pay you significantly higher interest rates than, say, your standard traditional savings account. You put your money in just like any bank account. But the key difference, the really important part, is that APY, the annual percentage yield. That percentage is just much higher, which means your savings grow faster.
Yeah.
A lot faster, usually.
Okay, that makes sense. Simple enough. And I think this is where maybe Alex or someone listening might pause and think, if these are so great, why isn't every bank offering these amazing rates? What's the difference? Is there like a catch?
That's a really good question. And yeah, it's a common one. The main reason HYSAs can offer those better rates, usually it ties back to how the bank operates, their business model. See, a lot of these top HYSAs, they come from online-only banks or sometimes credit unions operating mostly online. Unlike your big traditional banks, the ones with branches on every corner.
Right, the brick and mortar ones.
Exactly. Those online banks have way lower overhead costs. Think about it. No expensive branches to rent or maintain, fewer tellers, lower utility bills. And they can pass those savings, their operational savings, directly on to you, the customer, in the form of those higher APYs. So honestly, there isn't really a catch in terms of safety or anything like that. It's mostly just a leaner, more cost-efficient way of doing banking. Although, here's maybe a small, subtle thing people sometimes miss when they switch to an online HYSA. The convenience is great, right? And getting your money out is usually easy, but it pays to be aware of transfer times, especially for bigger amounts, smaller withdrawals, often instant. But moving, say, Alex's whole $8,000 car fund back at their checking account to actually buy the car, that might take a business day, maybe two, to fully settle.
Ah, okay. That's a really practical point.
Yeah, it's not a huge deal, but it's something to just plan for. Don't expect it to work like swiping your debit card for a large purchase instantly. Plan that transfer a day or two ahead.
Good tip. Easy to assume everything online is absolutely instantaneous. Knowing that little detail could save Alex, or anyone, a bit of stress right when they need the money. Okay, so we know what they are, savings accounts with better rates, and we know why often online banks with lower costs. But let's get to the really juicy part. How much more money are we actually talking about? Because you said significantly higher, but what does that really mean?
It really is significant. We're not talking about, a tiny fraction of a percent more. The numbers we've seen suggest that the best HYSAs can pay, get this, like 10 to 12 times the national average rate for regular savings accounts.
Wow, 10 to 12 times.
Yeah. So let's look at some real figures. As of roughly mid-2025, you could find some HYSAs offering around 5.00% APY, maybe even a bit more. Now, compare that. If Alex's $8,000 was just sitting in a standard savings account at one of the big traditional banks, they might be getting close to zero, sometimes literally
Okay.
0.01% APY.
Seriously, 0.01%.
Seriously.
Seriously. Even the national average for traditional savings is way lower, maybe around 0.40%. So 5.40% versus 0.40% or 0.01%. The difference is huge.
Okay, those numbers really do hit home. Let's make it super clear. Stick with that $10,000 example you mentioned earlier, just for easy math. So you deposit $10,000, leave it for 1 year. If it's in an account earning that national average, say 0.39% APY, after a whole year you'd earn, what, about $39 in interest? Your total is like $10,039. I mean, that barely covers a nice meal out these
Right.
days.
Underwhelming, to say the least.
Now take that same 10 grand,
Yeah.
put it in one of those HYSAs offering 5.00% APY. After just 1 year, you'd earn a full $500 in interest. $500. Your total balance, around $10,500, that's an extra $461. Just found money almost. Just by picking a different, smarter place for your cash, that's incredible. It really is. And, full disclosure, for years, I was that person leaving money on the table, just inertia, Didn't get around to it. Genuinely one of those financial life hacks that sounds almost too good or too simple to be true. But it absolutely works. And this brings up a really crucial concept: compounding interest. Because that difference, it gets even bigger over time or with larger amounts. What compounding means, essentially, is that your interest starts earning its own interest.
Ah, okay, so it snowballs.
Exactly. It snowballs. That $500 you earned in the first year, it doesn't just sit there. It gets added to your principal. So in year 2, you're earning interest on $10,500, not just the original $10,000. And that effect over time makes even a decent APY and HYSA way more powerful than just letting cash sit stagnant. Your money starts working for you.
Okay, compounding. Got it.
Yeah.
Your money making little money babies. Love it. But, okay, for a lot of people, especially if we're talking online banks maybe they haven't heard of, the next big question has got to be safety, right? Is my money actually safe? And can I get it out when I need it? I mean, what if Alex has a sudden emergency? Or just finds the perfect car deal and needs that cash now? How does that work?
Yeah, both really important questions. And you absolutely need clear answers before you move your money. Let's talk accessibility first. HYSAs are designed to be very liquid. That's finance speak for easy to get your money out. You can make withdrawals, transfer money back to your checking account, usually pretty easily through their website or mobile app. There generally isn't a lock-in period like with some investments. No penalties for taking your money out. It's your money, fully accessible. So if Alex needs that car fund tomorrow, they can get it. Just remembering that little point about planning a day or two for large transfers.
Okay, so accessible, check. That flexibility is definitely key. But what about the safety part? Security. I could see some listeners, maybe even me sometimes, feeling a little uneasy about putting savings into an online-only bank, one you can't physically walk into. Is that a common feeling, and how do you address that?
Absolutely common.
Yeah.
Totally understandable. We're used to seeing those solid brick buildings, right? It feels secure. But here's the great thing. With HYSAs from reputable institutions, you don't actually sacrifice safety to get that higher yield. The key, and this is non-negotiable, is to make sure the account is federally insured. For banks, that means it's FDIC insured. For credit unions, it's NCUA insured. This insurance protects your deposits, your principal, up to $250,000 per depositor per insured bank. So even if the bank online or traditional were to fail, which is rare, your money up to that limit is safe, protected by the federal government.
Okay, FDIC or NCUA insured, up to $250K. That's the magic phrase to look for.
Exactly. That federal insurance gives you the same rock-solid peace of mind. Whether the bank is a fancy lobby or just exists online, your money's just as safe within those limits.
Right. So knowing Alex's money is safe and they can get it when needed, what does this all mean for their car fund or for any of your financial goals listening right now? Like, when should you actually use a HYSA? What's it best for?
Yeah, great question. HYSAs really shine for cash that you're likely going to need in the relatively near future. Think months or maybe a few years out, not decades necessarily. It's perfect for money you want to keep safe and easily accessible liquid, as we said. But you also want it to actually grow a bit, beat inflation maybe, to kind of bridge that gap,
Okay.
between a checking account earning basically nothing and longer-term investments that might carry more risk or tie up your money.
Okay, that makes perfect sense. So for Alex, saving for a car they plan to buy in, say, a year or two, it's a perfect fit. What are some other classic examples? Where else do HYSAs really make sense?
Oh, definitely. The number one use case for many people is building an emergency fund, that safety net money. Instead of just having it sit there doing nothing, potentially losing value to inflation, in HYSA, it's actually growing. which strengthens your safety net over time. It's also fantastic for saving for a down payment on a house or a big vacation fund, maybe saving for wedding expenses or even property taxes you know are coming up. Really, any specific savings goal you have that's maybe 6 months to, say, 3 or 5 years away, where you want growth without stock market risk. It's super practical.
Those are all really concrete, helpful examples. Okay, but let's get even more practical. Beyond just knowing when to use it, what about choosing one? Alex is ready, they're convinced, they go online. What should they look for besides just the highest APY number? Are there other features, maybe red flags?
Absolutely, yes. APY is obviously important. It's the main draw, but it's definitely not the only thing to look at. First, as we said, double check, triple check that federal insurance,
Right.
FDIC for banks, NCUA for credit unions, non-negotiable. Then look at things like minimum deposit requirements. Do you need a certain amount to open the account or to get that advertised high rate? Sometimes there are tiers and fees. Huge one. Look closely for monthly maintenance fees. Those can totally wipe out your interest earnings if you're not careful. Most good HYSAs don't have them, but always check. Also, maybe check out their mobile app. Is it easy to use? What are the reviews like for customer service? A great rate isn't much good if the app is clunky or you can't get help when you need it.
Good point about the app and service.
And one slightly more technical thing, see how they compound interest. Is it daily or monthly? Daily is generally better for you. It means your interest starts earning interest slightly faster. It's a small edge, but it adds up.
Okay, so insurance, minimums, fees, app service, and compounding frequency.
Got it.
That's a solid checklist.
Yeah, and one more important piece of knowledge here, just to manage expectations. While HYSAs are fantastic, those high interest rates, they aren't usually fixed forever. They can, and often do, fluctuate over time. Banks adjust their APYs based on what the Federal Reserve is doing with interest rates and general market conditions. So this makes HYSAs perfect for flexibility and keeping cash safe while earning something, but maybe not for locking in a guaranteed return for many, many years. For that, you might look at something like a CD, a certificate of deposit, but that often means less flexibility. But even with fluctuations, HYSAs almost always beat traditional savings accounts by a wide margin for short to medium-term goals. That compounding still works its magic.
That makes sense, the rates moving with the market. But then that brings up another practical question for someone like Alex or anyone listening. Is there like a rule of thumb? How often should you maybe check your HYSA rate just to make sure you're still getting a good deal? Or should you consider switching if it drops?
That's a really smart question to ask.
Yeah.
You don't want to set it and completely forget it forever, necessarily. I'd say a good habit is to maybe glance at your rate every 6 months, or perhaps once a year. Or, if you hear major news about the Federal Reserve raising or lowering interest rates significantly, that might be a good trigger to just check in on your account's APY. It doesn't need to be a daily thing, definitely not. But a quick check periodically ensures you're still competitive. And if you find your bank's rate has dropped quite a bit compared to others offering HYSAs, don't be afraid to shop around again. Opening a new HYSA online is usually pretty quick and easy these days. Transferring the funds isn't hard, so you're not really locked in. You have the power to move if you find a much better rate elsewhere.
Okay, periodic check-ins, good advice, easy enough to do. So let's try and wrap this all up nicely for everyone listening. Whether you're like Alex, saving for that car, or you're building up an emergency fund, saving for a down payment, whatever your shorter-term goal is, a high-yield savings account, an HYSA, it really seems like a fantastic starting point. It's beginner-friendly, it's low risk, basically no risk to your principal if it's insured, and it gives you that powerful combo, high interest compared to traditional accounts, full liquidity, meaning your money's not locked up, and that crucial federal insurance for peace of mind. It really does sound like a smart first move for pretty much any saving strategy.
Absolutely. Couldn't agree more. There's always more depth we could go into in personal finance, always more to learn. But for now, just remember those key steps we talked about. Find a reputable bank or credit union. Make absolutely sure it's FDIC or NCUA insured. Compare the APYs, yes, but also look at the fees, the minimums, the usability. Choose what works best for you and your money. And maybe here's a final thought to leave you with as you go about your day. Just consider, what goal do you have? Maybe a short-term one you could reach faster. Or that emergency fund, could you build it stronger, make it more robust? Think about how much closer you could get just by making a simple switch, by optimizing where your safe, accessible cash is sitting. What's your Alex moment just waiting to happen?
That is a powerful question. It really makes you think, doesn't it? Well, we really hope this deep dive has given you some clarity, maybe some confidence, to take that smart first step with your savings if you haven't already. Think about that question, maybe do a little research on current rates, and we'll catch you on the next deep dive.